Opt out of the cashless surveillance economy. Open society needs tailored solution for the digital era. Canada leads the world in the transition to digitized commerce. With more than 2 credit cards per capita, the cashless economy for transactions is approaching, and the consequences will be more than users expected. As stated by Jerry Brito of the Coin Center, quote, "A cashless society is a surveillance economy," unquote. Bank-mediated transactions enable unprecedented monitoring, and, quote, "the death of cash means the birth of perfect financial control," unquote. For example, China's social credit system punishes behavior the regime deems unfavorable, aided by monitoring via payment platforms. Worth fighting for. Privacy is crucial to a liberal society. Even the most prominent advocate for ridding economies of large note denominations, Harvard economist Kenneth Rogoff, acknowledges that, quote, "we need cash for privacy," unquote. His concerns, shared in The Curse of Cash 2017, are terrorism, tax evasion, and constrained monetary policy. Canadian legislators have acknowledged the value of privacy in passing 2 federal laws, the Privacy Act and PIPEDA. Respectively, they govern how the federal government and private businesses handle personal information. Yet these laws have proved blunt instruments in the face of rising risks to privacy and autonomy in the digital age. For example, in October 2018, Global News reported that Statistics Canada had requested from banks the transaction and personal information of 500,000 customers. This was to track household and consumer trends, and it occurred without the consent or knowledge of the subjects. Rather than find themselves protected by PIPEDA, bank customers learned that StatCan's actions were explicitly authorized by PIPEDA. An exception granted assumed StatCan had lawful authority, which remains in dispute, but backed by the Prime Minister. Calgary MP Michelle Rempel-Garner, Conservative, disagrees and in 2018 tabled a petition from one of her constituents signed by 23,000 citizens with the House of Commons. It described the uninvited data sweep as, quote, "a gross intrusion into Canadians' personal and private lives," unquote. This proved feckless, however. In addition to PIPEDA, social engineers introduced in 2022 the Consumer Privacy Protection Act, CPPA. Currently in draft stage, the CPPA proposes to execute the guidelines stated in the Draconian Digital Charter, discussed in Chapter 6. More laws will not save us. This StatCan case is likely the tip of the iceberg. If privacy protections are to impede overreaching government, relying on the government itself to enforce them is like a fox guarding the henhouse. StatCan displayed negligence during the 2016 census when it lost hundreds of sensitive files. Some found their way to a subway, got lost in a stolen car, or were delivered to the wrong addresses. Furthermore, in 2012, the federal government lost the personal information of 583,000 people with student loans. The government eventually paid the victims a $17.5 million settlement in 2017. With so much sensitive data floating around, private companies are also abusing it. Privacy Commissioner Daniel Therrien has documented many cases ranging from the petty to the serious, including banks selling credit card information to each other. A digital solution for a digital problem. None of this can happen with old-fashioned cash, which requires no middleman and generates no ledger entry. However, cash does not work for online commerce and is clunky relative to plastic cards, many of which work without physical contact with payment devices. When large sums of physical cash enter the formal financial sector, they become subject to the same scrutiny and reporting requirements of digital transactions in Canadian dollars. Limited reporting for major formal transactions, rather than prohibitions, offers up a healthy regulatory balance. Prohibitions on online and conventional bank transfers already hinder legitimate charity, especially internationally, which makes the case for parallel routes. As Brito notes in his report, The Case for Electronic Cash, many of the nations flagged as high risk and often blocked are precisely where charity is desperately needed. Payments beyond the hands of the state, on the other hand, can be a tool for civil disobedience. In Argentina, Uber passengers use foreign credit cards and cash to get around the prohibition that protects the violent taxi cartel. Alternative currency donations also support controversial deplatformed activists and journalists, such as Toronto native and former mayoral candidate Faith Goldie. The key is to find digital mediums of exchange that preserve the distinct attributes of physical cash: permissionless, peer-to-peer, and untraceable. Contrary to popular understanding, Bitcoin does not fit the bill, since it is not anonymous. Other cryptocurrencies in circulation, such as Monero, Dash, and Zcash, have designs focused on untraceable transactions to ensure privacy. As governments have issued regulations to crypto exchanges, the adoption of private digital coins has slowed because registered brokerages can only support assets that comply with anti-money laundering policies. While Monero and Dash were among the top 10 cryptocurrencies in terms of market capitalization a decade ago, now they occupy the 25th and 76th spots, respectively. Zcash is way down in 81st position. These three are the pick of the bunch in terms of anonymity, but they are struggling with broader cryptocurrency growing pains, such as price instability. How their use will evolve remains to be seen, but they should be welcomed by potential users and honorable regulators as vehicles to preserve a free society. The next chapter addresses more broadly how to incorporate cryptocurrencies, including anonymous cryptos, into your life. Ulterior motives of cash opponents. There are influential parties who stand to benefit from a cashless society, notably central banks and credit card companies. Through the UN Better Than Cash Alliance, they lobby against the need for cash and for making cardized banking more accessible. These institutions show no interest in digital cash that would flow outside their hands. Central banks do not conceal that they would like to impose negative interest rates, a Keynesian dream that is now impossible with physical cash. Credit card companies collect a portion of the transactions they facilitate, so cash is anathema to their business. For Canadians, the need for physical and digital cash is clear. While we defend the use of the former, we also need the latter for today's evolving economy. Forms of digital cash are still taking hold and innovating, but their availability and usability will be a bulwark of a free society in uncharted territory.